What did Zillow say? What did they release, right? The housing market has been on everybody's mind, and everybody's been trying to do their own prediction, and what's really going to happen? Are we going to have another recession like 2008? Is everybody not going to be able to afford housing? Everybody's going to go back to renting? We'll see. Let's see what they have to say. Hello. Welcome back to the channel, guys. If you are new here, my name is Sarah Woodard, a realtor here in Pierce County, Washington with eXp. And what we do here is we talk about real estate, buying, selling, and investing on this channel. So if you do enjoy this video, go ahead and like and hit that subscribe button for me. I would super appreciate it. I would also love to hear your guys' feedback. Don't ever hesitate to reach out. I'm here for you guys. Okay, guys, so this is what I woke up to this morning, like I was saying. Wednesday, Zillow researchers released a revised forecast predicting that U.S. home prices would rise 14.9% between March 22 and March 23. That's down 2.9% points from last month. Home prices would shoot up 17.8 over the coming year. Now let's talk about this. So what it's saying is that home prices are going to rise within the next year and that it's still going to continue to be a seller's market. And yeah, those mortgage rates are going to rise. Let's get actually into this. It said the downward revised forecasts are affordability headwinds that have strengthened faster than expected, largely due to the sharp increase in mortgage rates, wrote Zillow. Further risk to the outlook as well, inventory levels remain near record low, but have the potential to recover faster than anticipated, which could lower future prices and sale volume projections. Okay, so here's a great example that they're giving us. The fact that Zillow has cut its forecast shouldn't come to it as a surprise. After all, the swift move up in rates is creating a serious affordability crunch for homebuyers. At a 3.11 fixed mortgage rate in December, a borrower would owe a principal and interest payment of $2,138. So this would be your monthly mortgage on a mortgage of $500,000. This payment would spike to $2,718. That's a pretty big difference. If taken out at a 5.11 mortgage rate over the course of a 30-year loan, that's also additional $208. That's something to think about. Guys, here's the meat. If Zillow is right and home prices, if they're right, let's highlight that part. If they're right, if Zillow is right and home prices do rise another 14.9% over the coming 12 months, it's marked another historically strong year for home price growth. Over the past 12 months, home prices are up a staggering 19.2. Each of those figures are outliers compared to the average annual U.S. home prices growth of 4.6. But look at that one that's been posted. So even with the downward revision of last month, these figures could represently mark a competitive housing market in the upcoming year. Guys, we've already been living in a competitive market. We have steps to be able to get you into that house. Don't think it's impossible. It's just trying and not just staying in that renting game, because that's not where you want to be. Our evidence points to abnormal U.S. housing market behavior for the first time since this boom in the early 2000s. The reasons for concern are clear in the certain economic indicators. Prices appear increasingly out of step with fundamentals, wrote the Dallas Fed researchers. Yeah, every time that I walk into a listing that I think is definitely overpriced, I will point it out to my buyers of why I think this is an overpriced house and why I think we should move on. There's a lot of people out there that just need to sell their house because they need to move on, and they're probably going to be really honest with their pricing. And then you're going to get other people who just listed their house because they know it's a seller's market and they're literally just there to get that. Buyers and home sellers alike might want to take housing forecast with a grain of salt. This is true, guys. This is always just predictions. This is something that we can always communicate and talk about, and it's like Vegas. Kind of just take a guess, but in every step, we're going to make the right decision. Here's a great example of why we take everything with a grain of salt. Look no further. The housing forecast published during COVID-19 recession in the spring of 2020, both Zillow and CoreLogic published economic models predicting that the U.S. home prices would fall by spring 2021. They never did. Instead, housing market went on a historical run that continues to today. Yeah, we're still seeing some of the highest prices. Don't let this discourage you guys from jumping into being a homeowner. When I sat down and I reviewed this article with a couple other people, they brought up their own personal examples from 1991. And I know that's kind of a big stretch in years, but let's take this into consideration of what they said. They said that they bought a house out of necessity because, housing is always a need. And they were tired of renting for $1,400 a month back in 1991 in Southern California. This is where the location was. And location is everything. Bought their house for $102 in a foreclosure. When I asked what the mortgage rate was, I was incredibly shocked. They told me what this person told me that they did with this house is within a 10-year span, they added $30,000 to it, and in return, they ended up selling the house for $360,000. I think that's a pretty damn good return. I didn't even ask them if they refinanced. You had a possibility there. See, there's so many other avenues. There's so many other avenues to take to get you where you need to be. It's just whether or not you're willing to jump in and fight for it. Predictions. What do you guys think will happen in the next couple years? Let me know down in the comments below. I'd love to hear. And also, has anybody bought in a house for, 13% on a mortgage rate? Anything higher? I definitely want to hear those stories. See you guys around real soon.